Hello everyone, this is Bob Lucas. It is April the 2nd in the morning here in New York, and I hope you're all doing really well. So, the Bitcoin 4-year cycle is in. The December lows right here mark the end of the prior 4-year cycle. A cycle that went for 52 weeks lower in a bear market and 153 weeks high in the bull uptrend, for a total of 205 weeks, just 3 weeks short of a full 4 years. This video is an update to the 4-year cycle video I published on YouTube around January 15th, a video that was recorded originally back in late December, right when we were looking at this decline here in early to mid-December. It was about a week or two short from this final capitulation here. I think a video was posted on one of these declines here right at the beginning of December. But this December low here on December 10th, or at least the week of December 10th, now marks what I believe with, and nothing's ever certain in trading and investing, but with a very, very high degree of certainty, or at least high degree of confidence, that the 4-year cycle low has ended. That 4-year cycle low comes at a perfect time in the 4-year timing band at 205 weeks, and really does not leave any further interpretation for a low to come in the future to make or complete the 4-year cycle. If you had watched that video back in January, I did talk about the possibility that the February low, the 60-day cycle low that was due, could exceed on the downside the December low, and then that would stretch down to become the 4-year cycle low. But that hasn't happened. Instead, what we're seeing here is a whole lot of strength into this new 4-year cycle, and a move now, just today, above the prior to 60-day cycle highs. So this move today here on April the 2nd is essentially, for me, confirmation that this December low does mark the 4-year cycle low. We've got too much separation in terms of price, but more importantly, too much separation in terms of time here for this move to be anything other than the beginning phase of a new 4-year cycle. For all you investors and hodlers out there, really, the 4-year cycle is all for you and about you. And back in January, I made it very clear, and in videos since, that you don't want to be looking and waiting for further lows. We are deep enough, and we're deep enough in this bear market in terms of price at an 85% decline from the high, and also in terms of time, as we already approached the 4-year cycle time frame for the next low. This here was the opportunity to start accumulating, and as I said many times, to make sure that you have a fully loaded position, a position that you're comfortable with, a position that you can take higher and not risk essentially your livelihood and your family's livelihood, but enough of a position that would make the difference in the long run. Now, it is absolutely way early at this point. It is not too late to be invested or fully invested if you did not get and heed that warning and get your allocation correctly. It's only, Bitcoin at the moment is only $1,000 essentially off, or maybe $2,000 off the lows here, not even $2,000 off the lows. In the grand scheme of things, this is going to be kind of a rounding error to some extent, and it is not too late. At the same time, you don't need to panic, right? There's probably going to be now a period of consolidation from this move, and a sideways, continuation of a sideways move, similar to what we saw when the last 4-year cycle ended. So let's go back now 4 years, almost exactly 4 years right here. And pretty similar time frames, in fact. If you look at the end of the last 4-year cycle, coming off a 58-week bear market decline, you see this massive drop on good volume into January, as opposed to the recent low, which was December. And then you had a nice sort of move higher, but then kind of a partial retest. It really wasn't a retest on the absolute capitulation price points there, but a retest at least to the closing point of the candles here, and then a nice rally higher. And this is kind of where we are right here. I think if you can relate the same, if you can overlay, this is a similar type of move here where I think the market has a recognition. There was also a higher high that was kind of put in here the last time, and this is kind of recognition that the 4-year, if we were tracking the 4-year cycle low back then in real time, this development is similar to what we're seeing now, where it kind of confirms a higher high structure in the market. Now, similar though to today, I don't think we're going to escape, at least without something similar to this. And this here scared the hell out of a lot of people back then. It came down from, it doesn't look like much here because we're dealing with smaller numbers essentially, but from a percentage standpoint, from 317 all the way down to a low of 198. This decline here back in July of 2015 was almost 40% down to the bottom, which is obviously more than significant. This would have whipped many of the new bulls out of position. It would have whipped many of the people buying late, and it wasn't late, of course, in the grand scheme of things, but buying here after sort of a 40 or 50% move. These people here, probably a lot of people here, leveraged a little too much or bought an over position thinking that it's going to continue rapidly higher, and then probably gave up a lot of that, puked a lot of this out right here before it then rallied and never looked back. Now, if we go back to the current period here, this is probably something similar. A lot of people are probably buying a lot of extra Bitcoin right now, thinking that we are going to see something phenomenal like this occur. And hey, I never want to rule any possibility out in trading and investing, but I feel very, very strongly that this is not going to happen. Not going to see anything like this. And people who are buying with this type of view or scenario in mind are going to leverage up a little too much. They're going to buy way too much. They're probably going to either borrow, maybe even use a credit card, for example, but essentially buy Bitcoin with funds they can't afford to lose. And then what might happen instead, or what's more likely to happen at least, is that we get a lot of chopping. We even may get some more higher prices, but we may even get something like this, okay? And this would come down into the next cycle low, the 60-day cycle low. And then that type of move would punish anybody that's over leveraged right here in the short term. So the point of this is that if you're if you're investing for the long term, if you have that 4-year cycle play in mind, then don't overdo it right here. The type of potential and reward that we have ahead of us for the people who are patient over the next 3 to 4 years is so great that you don't need to be leveraging or risking too much capital right here that's going to throw you off position if we do get a nasty shakeout. And if you look at the 4-year cycle low here, this was nasty, but this to me was perfectly expected. I certainly was short the entire way, but we haven't since then had a nasty shakeout. So the last shakeout we had was 5 months ago. Bitcoin, and actually almost any asset class, if you look at gold as well, how it trades, it does like to inflict a maximum amount of pain on traders and investors. And I don't see how we get above this eventually, above this $6,000 resistance area without a major shakeout at some point. I'm not saying it's coming this week or next month. It may not come until August. Okay, we have to get through a number of these 60-day cycles still. But I'm pretty confident in saying that at some point, and let's just draw out a few of these here. So we have a 60-day cycle, April. We're looking at another one, say, in June. Okay, we may not get a shakeout here until August. So let's just draw in something like this. Bear with me 1 second here. Drawing in the highs and the lows, of course, all just hypotheticals here. All right, all looks great until we get shakeout. So let's try and clean this up just a little bit here. All right, but the point is not for neatness. The point is to say that some point, maybe even as late as, let's just say August, we get a 60-day shakeout here. We get this really horrific, you know, $1,500, $2,000 decline even, and that's perfectly normal in many regards in any market, whether it's a bull or bear market. But even in the bull market, you do get these nasty shakeouts before an asset begins to make another leg higher. So if it wants to break out above this $6,000 range, it's probably going to shake out all these people that are just getting far too excited about the possibility ahead, buying way too much than they can handle. And then what ends up happening is that not only do they sell and capitulate on this fear and believe it's going to go down and break below the December lows, but they end up losing on the extra leverage, and they end up losing their strong hand position, that Bitcoin, that position in Bitcoin that they never was going to give up or didn't want to give up because of the panic and the fear and the amount of losses they're inflicting. So you end up in a situation where not only are you kind of out of Bitcoin or have a very light load because of this type of sell-off, but you end up losing overall on the market. And then something like this in a new 4-year cycle, if it was to occur, is more likely to be a V-shaped recovery in price. So we would get a shakeout, but then we would get an almost immediate bounce back to the point where it started breaking down from, to begin testing that zone before maybe wanting to come back out, and then begin a more sustained bull market trend now that the accumulation phase is over. I also want to point out that from a short-term standpoint and a trading standpoint, I'm able to flip between viewpoints on a daily chart rapidly. So I'm not going to give you, and I will refuse to give you, day-to-day views on where I think the market's going to go, because again, you know, I can be short one day and can be long the next day. So it's pointless in doing that. So take a lot of these short-term lines and squiggles I'm drawing with that perspective in mind. These are guides. I like to focus on time. I am a time specialist more than anything else with the study of cycles. And the lines I'm drawing here are simply more for guiding purposes and nothing else. So, you know, I don't have a crystal ball here. I like to work with the time frame more than anything else. So we could also see, you know, a more immediate move lower back here, kind of get below here, and then sort of chop sideways a little more, and then come back into this point. I think overall, what I want you to take away from with this analysis is that I now firmly believe, basically a 98% belief, right? Because it's never 100%. Once you go absolute and stick to an absolute statement, you're going to be screwed essentially from a trading standpoint. You'll never be able to get away from that view and that bias, and you'll be trapped regardless of what price tells you. But I have a kind of a 98% confidence level now that the December cycle low is in, and that we are now into a couple of daily cycles, 60-day cycles, into the 4-year cycle. We are 3 or 4 months into the 4-year cycle. And the 4-year cycle, if we look at the prior 2 cycles as our guide, I'm going to try and zoom out a little bit here, I believe will run for approximately 150 weeks. The prior 2 cycles ran for 153 weeks in the bull trend, and the one before that, zooming down, was 142 weeks. So again, just a guide, just an estimate for planning purposes, but looking at around the 150 weeks to around the October 2021 time period. It's a lot of time, right? And a lot of room to move. So as an investor and a hodler, put that into perspective. How this market squiggles and wiggles and oscillates here over the next coming 3 or 4 months is irrelevant to you as a long-term investor. If you continuously are waking up in the morning and checking price, but you call yourself a long-term hodler or investor, then you're doing yourself a disservice by allowing price fluctuations in the short term to influence how you invest in the long term. Very important concept. Please try and really appreciate that statement and understand your time frame and be happy to be in that time frame from an investing standpoint and ignore what happens. Just as you should have ignored this $2,000 decline, you're going to ignore to a large extent, even though you're going to be happier, of course, but you're going to ignore the $1,000 or $2,000 move higher because your prize is up here. Your prize is a couple of years away and it is up here. Okay? Not designed to get everybody really pumped up, but that's really the prize. That's what you're in this for. This is the 4-year cycle horizon that we're looking at. So again, let's see if we can kind of I'll give you an outlook to what I see potentially happening here over the next few months, and then maybe let's just stretch it out to the 4-year cycle top. First thing I believe is that this $6,000 or $5,800 to $6,000 level on Bitcoin is going to act as some significant resistance. It provided significant support on the way down in the bear market. There was repeated attempts to break below that. Everybody thought that was going to hold and the market was going to go up. I did not, and I don't want to get into necessarily why at this point, but from a descending triangle standpoint, I think the breakdown here was obvious, but at the same time, there's going to be a lot of resistance at this point when it comes back up to test that area. I don't know when it comes to test that area. That's the key or the problem right now. I don't know exactly when we test that point, but I think it'll happen sooner than later. We could even get that in the next week. We can even get that over the next few days. We don't know, but let's just say for argument's sake, we get up here and we test. That will just be the first test. I think at some point, and I'm just going to draw this in again loosely, right? At some point, maybe around the August timeframe, we get down, and I don't think we get anywhere near necessarily the December lows. We probably get closer to the February lows, okay, around about 33, 3,400. Again, arbitrary numbers I'm throwing out. It's more about time. So I think we get down here and we scare the hell out of a lot of the longs. They get worried that it's been kind of 7, 8 months since the low. It's taken too long. It's now reversed lower. They start to panic. They're too leveraged, and of course, they bail out. Talked about that 5 minutes ago. Let's move on here. Then I think we come up and we kind of start testing this area a few times. Now, I don't know if we can get above that period, about that 6,000 point in 2019. I've got to be honest with you. We've got to be patient here. It takes time to build a solid foundation and a solid base in any new 4-year cycle. But at some point, we probably do get above this $6,000 level. And once we get above that, we may drop quickly back down. But then we get it back above, and then that same level begins to act as support. Okay, and then we can begin to find an area that has less weight and less friction, and we will then begin to accumulate or to begin to rally higher with a little more intensity and velocity. Okay, so when does the rally in the next 4-year cycle really take hold? And what you notice here is that most of the gains in the 4-year cycle occur right near the end, and it occurs quickly and rapidly, and very few people take full advantage of it, and it's just too difficult to do. If we go back to the original 4-year cycle, this is the breakout point right here in January of 2013. The major top occurs in November of 2013, 11 months from exceeding the prior high and then rallying, in this case from 13 or even like sort of $20 or $30 here to 1,100. That's the gain of the cycle in 11 months. Then if you look at the prior cycle and you look at the 1100 top from the first 4-year cycle and you draw across, here's the breakout point. The breakout point occurs in April of 2017. Think about that. April 2017 to December. Now you're talking about only 6 months of, or 7 months to the next high. So from the April highs of around 1300 to 20,000, pretty much the entire gain. This is where new all-time highs come in, right? So for approximately almost 4 years, we don't have any new all-time highs. And then we see a sort of 15x move occur in 7 or 8 months. Or 10 months, I'm sorry, I keep confusing myself there, but you get the point. Point is that most of the gains, the really big speculative gains, occur only once price hits a new all-time high again. So what happens in the meantime is you get this accumulation phase, an awareness phase, institutional phase, and it's only the retail phase right at the end where most of the, let's just call it dumb money and the retail money, and no offense to anybody listening, many of you probably got in at some point right here, the last cycle, okay? That's when it gets really heated. But we're in this early accumulation phase, not even really the awareness phase at this point. Smart money accumulation, this is where we want to be. And this is why it doesn't matter that price is up 1,000 or 2,000 off the lows. And it doesn't matter if you buy right now, if it drops another 1,000 or 2, you're in the accumulation phase. At some point, what we're going to see, and I'm going to draw this backwards some point, if we expect the next 4-year cycle low to go 150 weeks across, okay, again, no absolutes here, we're using just guides. But if we take that and then we draw backwards a date, and we want to go, let's just say 9 months back. Okay, so we want to go 36 weeks. This here is the point where it exceeds the prior highs. So I'm going to draw from the $20,000 level to here. This is the point where, and again, this is all guides, I can't stress that enough, where Bitcoin probably exceeds the $20,000 level and begins to go parabolic. And then from there it does a 10x, 15x, whatever the number is, nobody knows. But this is the point, 36 weeks from the top, or around 9 months, give or take, that it begins to exceed. So then, if we know that, or if we believe that's roughly how it work, then we can start to kind of draw this up, right? So first test, back down, another test, and then go, okay? That here, and again, this is not very neat, but it's not supposed to be. You can look at the prior move here and the one before that. You get these 60-day cycles of rally up above the Bollinger Bands, back down, up above the Bollinger Bands and back down, for example. It's going to be something similar to that. Probably get a nice shakeout, a couple of shakeouts along the way as well. So we see most of 2019 below and accumulating in under the $6,000 range. At some point, let's just say in October, we get one spike maybe above. Okay, gets everybody excited, come back down. It's not until maybe towards December that we start to really put price above the 6,000 and then behind us. Okay, maybe a few retests lower, and then early 2020, so let's just say a year from here, we begin to get full awareness now. Now we have price over 7,000, getting up towards 8,000. It's now more than doubled, if not tripled, getting close to tripled off the December lows. People are starting to come back in that were probably invested at some point in the last cycle. And now this is more of an awareness phase, much more institutional money starting to come in. Okay, probably an ETF is approved by this point, maybe a year out or so. So we're starting to get a lot of interest now building in this. But still, retail does not believe now. Retail won't believe until we break 20,000, and CNBC comes on and talks about, you know, all-time highs and all that type of thing. It's all repeatable. Every cycle is the same. Okay, but this then becomes a situation in 2020 where we start to fill the gap between that $6,000 to $7,000 range and the $20,000 all-time high of 2017. And that comes and completes all of 2020 and then into some of 2021, where 2021 is the third year, and third year is typically the biggest year in a bull market, at least a secular bull market. And that's when the gains begin to get ridiculous. So then what happens from that point is really anybody's guess. My guess is that we have yet another similar move, if not a bigger move, in terms of percentage-wise than the last two. I believe that the 2021 bull market top is going to be a massive blow-off top like you've never seen before. And I also believe, and it's not for this video, that that's going to mark the top of what is a 16-year cycle. We see 16, 17-year cycles in the equity markets and gold and many other markets, and I believe that this will mark right here the top of a 16-year cycle. So 4 of these 4-year cycles. Sorry about that. This is the third, then there'll be another fourth. The fourth one, I believe, will be a massive 4-year bear market, but that's for a later time. That's for 2000 and sort of 21 to worry about. But I believe there'll be a 4-year bear market going into the sort of mid 2020s decade. But that's to come. Right here is where we get this massive blow off top, and from here, 10x from the 20,000 top. And we've done 10x before from the breakout point. 10x to me is not much. Okay, and 10x in Bitcoin is $200,000, and $200,000 is only, and this is rough numbers, I believe around about 3.5 or $4 trillion in market cap, which obviously is a phenomenal amount, right? But now we're talking sort of 13 years, 14 years into adoption, and we're talking a much different game right here, possibly and hopefully a massive lightning technology adoption. So we're talking about a different environment. We're talking about ETFs, we're talking about institution, we're talking about 401ks involved, a worldwide phenomenon at this point. So we're looking here, and I'm looking at least at the blow-off top phase, okay? And then I believe 200 is the target. I would probably be out of a lot of my positions by that point, but this could overshoot, and that's obviously too much, but this could overshoot. I think possibly even as high as the $300,000 level is possible, and not out of question for what we're seeing right here. Then we can look at, of course, just like we have seen now, a move back down. Now, where does that move take us? Below. If we look at prior bear markets, around about 85% of the move is retraced, okay, but we always stay above the top from the prior 4-year cycle. So not that it's important right now, but this move, if it got to 250,000, an 85% retracement brings Bitcoin back to around about 36,000. So around about 36,000 in October of 2022 would be your 4-year cycle low. It's probably actually, I think, November, but in this time frame is the next 4-year cycle low due at around about the 35, let's just say, to $50,000 range. So what's going to be important is that we are invested, that we have our eye on the prize, that we are accumulating, we are taking profit at some points, some minor profit, but then that we are fully invested and also understanding of the next 4-year cycle, and that we, more importantly, during this last phase here, are scaling out and not scaling in or not buying in. And we're certainly taking a huge amount of the profits up toward the top, and only have a small amount. You want to always have some Bitcoin, of course, for the long term and forever. But we want to be out for most of this because we don't want to ride, like many of you did, we don't want to ride another 4-year cycle low down 85%. You don't want to be holding Bitcoin from this level today at 4,000 to 200,000 and back to 30,000, okay? That's going to be the goal for us over the next 4 years or the next 3.5 years, is to take advantage of this opportunity. Now, does it have to work out this way? It doesn't, right? We could be looking at a double top with 20,000 and then the next 4-year cycle low coming back down to 3,000. That's a possibility. I don't want you to think that the cycle has to play out in this way. I'm only telling you how I believe it's going to play out based on a longer time frame, 16-year asset cycle, and the fact that I believe we're still firmly in a secular bull market for Bitcoin. And under that scenario, this is what I believe is the most likely outcome to play out. And that's why we still have to be aware of the alternative possibilities. We have to be aware that we could indeed be looking at sort of 8 years of sideways chop, right? Where it gets to 20,000, it kind of does something like this. It's possible. And then the next 8 years, you get the point, right? It's more of a sideways chop. That is a possibility, which is why I keep saying when you invest today, you're getting in near the bottom of a 4-year cycle, and that you're investing with money that you can afford, not necessarily to lose. Nobody can afford to lose anything, and nobody wants to lose anything, but you're not betting everything on this, right? You're not going to cause catastrophic harm to you and your family by putting in way too much at this point, because there's no point, there's no need. If we're going for a 30x move from this point or 100x move from this point, you don't need to be more than, let's just say, 10% of your of your wealth allocated to this, and that's even high. You just don't need to. Okay, because we're looking at such massive gains. Not only that, if you're putting in too much capital at this point, if you're looking at the potential here and thinking about owning private islands and a suite of fast cars, what's going to happen is you're not going to be able to ride the big capitulations or the big shakeouts that the market's going to give, and there will be shakeouts. And I'm talking about 20 and 30% corrections in Bitcoin over this period at some point. If not one, at least one, but if not one, at least maybe 2 or 3. And if you're taking in the mindset that I'm going to put everything in right here, then you're not going to be able to hold those gains. You're going to basically give it back. You're going to sell out at some point, and then you're going to be in an undesirable position that you're not going to have. You're not going to be focused on the plan and the 4-year cycle, and you won't have the full position that you need. Okay, so that is my summary. That is my update since the last 4-year cycle video. This is overall, to me, very encouraging. This is great news, but keep your eye on the prize, keep your eye on sort of the possibilities here for shakeouts. But again, like I've been saying in all my videos the last 2 months or 3 months, you want to be, from a long-term holder's perspective, fully allocated. Get your allocation now and be happy with that allocation. Be happy even if the market turns lower at this point. Be happy that we are in early during the accumulation phase of Bitcoin. Thank you guys. Hit the like button if you like this video. Please subscribe. Please share this video on social media or anywhere you like. Get the message out. And I look forward to coming out with some more videos on long-term holding and investing. All the best to you. Wishing you all the best. Thank you.